G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now both indices have risen since our last update. I'll go through the charts in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook as of today, February 13, the DAX recently surpassed 22,000 point for the first time, indicating strong market performance. Key contributors to this growth include major companies such as Siemens. Despite Germany's ongoing recession, the DAX's rise underscores the decoupling of major German companies from the domestic economy, with significant revenues generated internationally. For the Nikkei, closed at 39,572 in January 2025, maintaining a strong upward trend. Technology sectors hold significant weight in the index, contributing notably to recent gains. Analysts anticipate the Nikkei reaching new all-time highs by the end of 2025, driven by corporate reforms and stable interest rates. So first, looking at the Japanese Nikkei, again we always look at the long-term trends. So here we've got the monthly, the weekly and the daily. I've got these moving averages for those new to the channel. They're in a description below should you wish to learn how to draw the moving averages in your own charting software. But here you've got the very long-term trend on the Nikkei since March 2023. It's been rising. We had a couple of pullbacks you can see there, especially due to that bearish divergence on the CCI. And that fell into that moving average range, giving us a slight this consolidation period, but also a break to the downside since then. So even though the price is still above the moving averages, you can see clearly it's been consolidating, and also I suggest a weakening of the market longer term. On the weekly, again, we had this couple of bearish divergence. The first one was there. That wasn't really much of a breakdown. You can see there, pulled back a bit, but didn't really hit our target range. If I was to draw a target area on that first one, just as to illustrate, you could probably take it back to that recent low there. You can see there it's broken into that 38% level. Or if we pulled it back to that significant low, it missed out on hitting that target. So that's why I always take it to the more recent lows before that divergence started. So you could have taken it to that point or that point without being too greedy. That way you know where it's going to drop to. Now in this case, with the divergence, that doesn't mean a full-scale reversal. It just means a weakening of the price or retrace, a short-term retrace, which it did in that case. In this other period, it's actually fell a lot further. And you can see that if I drew a Fibonacci from that high to that low, that's that 38% target range. Bounced in there, then it bounced out again. And since then, it's been consolidating sideways since around September of last year. So on the weekly, I'd suggest it's a consolidation period at the moment with a slight weakening of the CCI. So just be cautious about going long. However, having said that, on the daily, you can see there it's a fresh breakout to the upside with that candle there. So today on the daily, it's a fresh breakout, meaning you can take long trades on the intraday. So again, if I zoom out, you can see there it's been in this consolidation range between its support at 37,265 and resistance at 46.20. So it's been consolidating there. So just carefully, you'd be able to trade some of these longs and shorts, but again, very carefully. It's sort of been roller coasting above and below this moving average range. So if we go to the intraday chart, this is the 1 hour. So again, based on the daily, you take long trades only, and you would have taken your first. Let's say I go back to this point. You can see there that would have been close to going long there on that one there, but then it broke to the downside. Depends where you put your stop loss. I'd suggest putting it on the candle below the moving average, so you would have been stopped out on that one. Then going long again on this one, and that was in accordance with the daily going long. So you would have gone long with that break above the CCI, but also above the price moving average. And at the moment, you'd still be in the trade. So that's currently giving you just under a 1% gain in 11 hours of trade. Now, also zooming out, you notice here we had a bullish divergence. Higher lows on the CCI versus lower lows on the price. That actually bounced to hit our target range. And if we drew a Fibonacci on that one, go back to that recent high, you can see there that 38% level hit that range, and then it went sideways for a while, then it bounced out of there. So it's pretty much done that divergence. So again, just be mindful of that. I don't trade these divergence. I use them as an exit point. So if I was going short during this period and you started seeing a bullish divergence, you may want to take your profits off the table if you're not following the CCI necessarily. So for the German DAX, looking at the monthly first, you can see that it's been bullish, pretty strong bullish run since around about January 2023. Notice that it's pulled back with this CCI breaking into that moving average range. Then it bounced out of there. And since December 23, it's been a nice big bull run with the CCI and the price above their respective moving averages. On the weekly, now we drew these trend lines, and I'm going to just raise that slightly. That's still a slight bearish divergence on that range there, which equates to this range here. I'm just going to raise that as well. Now you'll notice there higher highs on the CCI, lower highs on the higher highs on the price, lower highs on the CCI, giving us a bearish divergence. I've drawn a target there. I'm just going to delete that because that's it's going to probably keep moving. As soon as that starts pulling back and reaching this moving average range, I'm going to draw a target once that's identified. We did have a bearish divergence back here on this range, and it pulled back, hit our target range, and it bounced out of there. So we expect we had a very small one there as well. And I'm just going to wait for that to start pulling back before drawing the next target range. That's on the weekly. On the daily, now notice here we had in our last video, we did have this bearish divergence here, but notice the CCI's broken higher. Now that's actually a double top on the CCI, and I'm going to still consider that a bearish divergence versus the price. So if we took the price to that new high, so if that CCI goes much higher, I'm going to invalidate that divergence. But at the moment it's a bearish divergence. So that's giving us a bit of a warning that the price is making new highs. But just be careful. We want to make sure that if that starts dropping, and the price may still keep rising, but the CCI may start dropping, it's still going to be a bearish divergence. So just be mindful of that. But at the moment, the price is still rising, so you would be taking long trades at the moment with the CCI and the price above the moving averages. That's on the daily. Now, if we go to the intraday chart, again, long trades only, you would have taken, well, first of all, back here we had a bearish divergence versus almost a double top on the price. Now, since then, it's actually hasn't pulled back enough, so that would have been a failed divergence. In fact, you could probably argue that wasn't a higher high, but anyway, I'm going to mark that as a failed divergence. And since then, the CCI has risen, so that is now invalidated, that divergence. So there's no more divergence in play. The CCI is moving in line with the price. So at the moment, if you're trading that based on the daily going long, back there, you could have taken that long entry there because the daily was long. So you take a long entry when the CCI breaks above the moving average, and so does the price, and you close it out when that CCI breaks into that moving average range. You would have closed it out on that candle. So in 11 hours of trade, 11 hours of trading, you would have made just 0.57% gain, which is not too bad a trade on the hourly. Enter another long trade there, the break above the moving average, and at the moment it's just about to enter that moving average range, so you could possibly take your profits off the table. Another 11 hours of trade, 0.8% gain. Something to notice as well, it's always 11 hours of successful trade for some reason. So take what you will out of that, but that's another little hint in terms of trading strategy. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.